May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily. Today's Monday, March 6th. Hello, my babies. Hope you had a lovely weekend and you're looking forward to a very productive week of trading. I'm looking forward to spending my time with you every single day at this time of day. Just before London Open, we get together, we do QuantBox Daily. What is QuantBox Daily? It's your global macroeconomic quant in a box. Well, that's what QuantBox is. So QuantBox to Forex is like candlesticks to technical analysis. You have to have a fundamental bias. You need to know what all the fundamental data is in order to formulate that fundamental bias. So, for example, economic data. What's happening with interest rates? What's happening with inflation? What are central banks up to? What's happening with your retail sentiment, your COT data? What's happening with seasonality? What's happening with market heat wave? All these things come together to give you a fundamental bias. The problem is when you try and collate these things on your own, it's quite a mission. Just try and get COT data for every currency pair you're trading. COT stands for Commitment of Traders, okay? So it's very difficult. Also, seasonality is a very hard thing to get your hand on consistently. Luckily for you, though, QuantBox has it all, okay? So QuantBox is a beautiful tool that Wayne McDonald has created for you. A one-week trial is just $7.90, and it gives you this beautiful dashboard right over here. And as you can see, you've got a number of different currency pairs under different categories. And over here, you've got this beautiful dashboard, which shows you top buys, top sells, currently strength. It's absolutely awesome. Look at this. Just beautiful, right? Nice little summary over there. You've got a market heat map, which is absolutely awesome. This gives you your top winners and top losers for the session. And you can refresh this whenever you want. It continues to update, okay? We've been using this in the past. We've had a look at the top pairs and the bottom pairs and then matched it up with with a fundamental bias on the right-hand side over here. You can see, for example, if we looked at, let's say, well, first of all your indices are up. So you're thinking risk on right now. Euro Aussie, for example, okay, one of the gainers. We can go over here and say, oh, what's happening with Euro Aussie? What is our bias on Euro Aussie? And we can have a look over here and say, our bias in Euro Aussie is currently neutral. Oh, which means that we've got strong versus strong or weak versus weak. Okay. Now, obviously, then we would want to wait for a bias to set, but it is something you can pay attention to on your charts, or you could be paying attention to fundamental data and what's happening into these currencies to then see when a change will take place. Okay, so you can go quite deep. Now, what's nice as well is that if you wanted to, let's say, for example, just go through the currencies on the left-hand side, you could say, for example, have a gander at all your dollar pairs and say, well, euro dollar currently is strong sell, pound dollar currently is strong sell, USD CAD is currently a strong buy, Aussie USD is currently a strong sell, and Kiwi USD is currently a strong sell. Well, it's a sell, right? So you can see me bullish on dollar across the board, which makes total sense, right? So you could then analyze the fundamentals and have a look at the sentiment and all that kind of stuff. But you can see what it does is it pulls all this data for you and it collates it into a beautiful score summary. And it scores that, as you can see, -4, giving us a sell, whereas euro dollar, -7, very strong sell, okay? Which is beautiful. So right now, we can see that everything is red. So you'd have no business in buying euro dollar, which is great because that means if you jump over to your charts, and let's have a look at euro dollar right now. If you were sitting over here, you'd find yourself in a bullish buy zone between the central and the M2. Now, normally as a trader, you'd say, oh, okay, price in the buy zone, I'm going to buy here. And you'd be so focused on your technicals leading your bias that you wouldn't realize that ultimately euro dollar is bearish. And that doesn't mean it doesn't go up. Okay, what goes down must go up and what goes up must go down. But what it means is that you can adjust your expectations from a trade. So for example, let's say you were paying attention to the buy zone on euro dollar and you were saying, okay, I understand that right now we're at a place where price could go up here because that's the target for this area over here. Okay. And if ever you're not sure about how pivot points work or how moving averages work or anything else, I definitely recommend you check out the FX Bootcamp Guide to Strategic and Tactical Forex Trading by Wayne McDonald. It's an amazing book. And you can also catch Wayne every single day at Forex.today. Okay, he does free videos on YouTube. So that's so you can understand how pivot points work and moving averages work and everything else. But nonetheless, if you are buying over here and your idea is taken up over there, because you know that you're fundamental bearish on euro dollar, you're going to adjust your expectations. So you'll be very, very, very sure to make sure, absolutely sure that they've got bullishness before you buy, not just jumping in an M2 and saying, well, I guess it'll go up because it's currently in position for a buy. So then, looking at your H4 time frame, you'd say to yourself, okay, well, do I have higher highs and higher lows? Have I got any situation where price has broken resistance and resistance has become support? Now, what I like to look for is roll reversals, because roll reversals are indicative of trends. And I also like to look at my moving averages, right? You can see right now, very flat on the 2155. Momentum is slow. We can see that, right? Look at the chart, very sideways. Euro dollar, also slow, sideways. It doesn't mean I'm not going to trade this. It just means I'm going to be very, very, very careful of trading it right now. I want to trade moving water. I don't want to get stuck in some Bulhasia, stagnant, stiff water, right? So looking at this right now, you can see we've got a bit of a contradiction because your monthlies are saying I'm in position for a buy, but your weeklies are saying I'm in position for a sell. So what do? Well, I think the first thing you got to look at is momentum. Have I got fast moving trend? And I don't, okay? I've currently got the sideways market, and it's not doing much right now. Okay, we can see it's kind of moving up, kind of moving down. So what I want to do is I want to block this off into a range, okay? And there's various levels here. There's this level, this level, there's this level, this level, this level, this level, okay? All good. I'm going to do that. Just because I've got the most recent low, most recent high, and that's kind of where we are, right? We haven't made a low below this. We haven't made a high above that. I am currently in position for a weekly sell, but I'm in position for a monthly buy. Those are contradicting each other. I don't want contradiction. Okay, I want things to say the same thing. One thing you must be aware of, though, is that because we've been moving sideways, these pivot points over here don't represent the true nature of the market. Now you can see if we continue going sideways this month, the next month's pivot points will be even narrower and even narrower and even narrower. And so what's happening is we're then going to realize that the pivot points are being represented by past volatility because that's how they're calculated. And so we tend to then realize that what's more important than the position is the break of the range. So for example, right now, I could ignore my H4 completely. And I could look at my daily and say, well, is my daily indicating any kind of trend? And right now we can see it's not. But we do have some interesting things taking place on euro dollar. You can see here that this resistance over here was resistance over there. But then price came down to this support over here. Now you might decide, okay, well, I'm a bear on the euro dollar. I'm going to sell. But I don't like that idea while it's currently ranging. What I would prefer to do is I prefer to wait for price to get out of this range. Even if price does come off this resistance and it does push price lower, that's fine. What I'm looking for is an indication that price is no longer stuck between this resistance and this support, okay? If price does go up and breaks up, if it pulls back down to this support, that's where I'll buy. If price breaks out and pulls back to this resistance, that's where I'll sell, okay? Now, what's nice is that if let's just say, for example, I know that I'm fundamentally bearish on euro dollar, but I'm aware that technically I'm seeing a higher high, higher low, I can totally be short-term long. But I will realize that because the bias of euro dollar is bearish, I have more risk in buying than I do in selling, okay? Something that I will have to actually pay attention to. And that makes me a lot more vigilant on when to get out of the long trade. The short trade as well, of course, because if price goes down to profit-taking zone, you want to make sure that you pay attention to any kind of reversals down there. But you're still aware of the fact that fundamentally this is bearish. Okay, and you can see if you look at your data over here, that's why everything is bearish. Okay, pretty neutral in the COT data, actually. So going through all of those dollar pairs, we can do the exact same thing. Okay, so we can say, well, euro dollar, we're totally fine with. And I'll pay attention to the daily chart because it's a lot less candles to pay attention to in H4. Look how H4 is quite difficult to analyze, whereas over here, nice and tight. So looking at pound dollar, let's go through Aussie USD first. So Aussie USD over here on the daily, you can see also currently lots of different levels going on. Okay, you got this support over here, but you've also got price coming off resistance over there. So what I'm going to do is, I'm just going to do this. Pop in a nice little range over here. I recognize that price is currently in position for a buy, but I've got this range going on. You can see price came down there, price came up there. I don't have higher highs and higher lows. Okay, I'm looking for a break of this range. Aware of the fact that technically I'm in position for a buy and the target's over here, but nothing has indicated bullishness yet. And of course, my bias is bearish, so I'm aware of the fact that ultimately, despite what price does over here, my ultimate goal is to sell Aussie USD based on the current fundamental bias. We can have a look at that and say, well, what is it telling us over here? We can see COT data -2, which means that investors are also short the Aussie dollar USD, and that's important information, right? You can see the rest of the data is just all red. So you have no real reason buying Aussie USD. Of course, if we got a higher high, higher low, you could be short-term long, but you would recognize the fact that you are trading against the fundamental bias. I do believe the reason why you have this tool is so you can trade in the direction of the fundamental bias. And if you were incredibly disciplined and patient, even if this presented bullishness, you would let it go and you'd wait for an opportunity to sell until such time as your fundamentals have changed. I know that takes incredible discipline, but it's that level of discipline that's going to make you a successful trader, okay? But in the meantime, what's nice is that we don't have to worry about it because we can just see this little range over here. We can block price in the range and we can just wait for it to start moving, okay? While paying attention to our overall bias, which is bearish. Now, we had a range last month that we were looking at over here saying, well, wouldn't it be nice if price could break out of here and pull back down to the bottom of the range? And I still said to you, if price breaks out and doesn't pull back to the bottom of the range and price comes down here, it's likely price goes all the way up through here and continues up. Now, we're not sure what's going to happen yet because you can see currently consolidating. We did not touch the bottom of this range. It is an untested level. So I do expect price to go all the way back up there. You can use that information to your advantage and say, well, is there a trade between here and here of 100 pips? There might be, but you need to break this range first. I don't like the idea of like buying now and then selling there. I prefer having a bias. And because you got QuantBox, there's your bias. So you could wait for price to be at resistance. That means that last month, the month before, whenever you had bearish opportunities, you can see that maybe there wasn't the most amazing bearish opportunities up until now. Fair enough. You could have exercised your bias on the pairs, or you could have been short-term long. Absolutely. Just like you can be down here, but you're waiting for that higher high, higher low. You can do whatever you want in your trading. It's your trading, but just make sure whatever you're doing with awareness, patience, and discipline. And if you are looking to buy this, that you verify the higher high, higher low. And that you know that even though you're buying it, the fundamental bias is bearish, and so therefore you'll be very, very careful as price rises up to different resistance levels. In the meantime, though, we wait. Looking at the pound dollar, you can see still currently consolidating in a buy zone, absolutely. But I don't see any indication of us breaking out of this range. And we can actually do this. You put price inside there. You say, cool, there's our range. Okay. Looking for that break, lower low, lower high, higher high, higher low, and acting accordingly. Okay. While realizing the pound dollar is currently bearish. And you can see here on pound dollar, go into the score chart summary. Retail sentiment is currently positive, but everything else is negative. Okay. But we do have a technical consolidation. So wait for that to break. Continuing on to the next dollar pair, we got Kiwi dollar. You can see here on the daily time frame, also sitting in a range. Okay. We came off the profit-taking zone last month, haven't gone very high up, and now we haven't gone above this point over here. We haven't gone below that point over there. We're currently sitting in a range. I'll get rid of this line over here. Okay. So it's the exact same story as the other dollar pairs. Now, what's nice about this is that you're just paying attention to these dollars, looking for price to indicate it's starting to move, and then you can act. So you can have all your dollar pairs on a single watch list, and just every single day, pay attention to the daily time frame, wait for that break, and be ready to pounce when it happens. USD CAD, as you can see, currently sideways at a sell zone. So you can see your USD CAD at a sell zone, your dollar pairs are at a buy zone. So everything is currently in position to go the opposite direction of the fundamental bias, but you are aware of that. But at the same time, you're also aware of the fact that right now, your USD CAD is presenting a bit of a different range to the rest of them. You see here, not as a tight range over there. So you could be looking at this and saying, well, if you are short-term short, you're looking for the lower low, lower high. As you can see on the H4 time frame, you're currently sitting in consolidation. So here, the H4 time frame is a lot easier to look at than the daily. Okay, your daily is much wider. So instead of looking at the daily over here, we can jump into the H4 and say, right, so have I got a breakout pullback sell, a breakout pullback buy? Now, of course, now you're saying breakout pullback buy. I'm completely out of position for any kind of buying. That could change. Okay, this can go sideways and then pop up and shoot up off some support. Absolutely possible. You can see here last week we're sort of in position, but largely out of position. But ultimately, it doesn't really matter because right now I'm going to ignore the pivot points and pay attention to the volatility. You can see here completely sideways. Okay, cool. We then jump into, okay, USD-ZAR. Sure, let's look at USD-ZAR. So that's under cross currencies. USD-ZAR. Down here, you can say USD-ZAR is currently strong buy. Look at all the data over there. Okay. USD-ZAR strong buy. And you can see there, we jotted this out last month saying, oh, you got price coming up top of the range. Can you sell there? Okay. Price very far above profit taking zones. Now, this time frame, similar to USD CAD, not easy to analyze on the daily. Take a look at H4 though. Look at that. You suddenly jump into H4, and now the range becomes very, very clear. Okay. You can see there, currently consolidating. Beautiful. You know exactly what to do now. Now you can be patient and you know what you're waiting for. It's a lot easier to wait for something when you know what you're waiting for. Now you know what you're waiting for. And yes, you're in position for a buy, fair enough, but look at your volatility. Okay, that's what's important to you. You can't float a leaf down a still stream, right? There you go. Okay, let's take a look. So we've also got some yen pairs over here. Let's take a look at our yen pairs on Quant. And let's see here. So on our JPYs, Aussie yen coming through neutral, which means I've got a strong Aussie and a strong yen, or a weak Aussie and weak yen. I'm not a fan of trading neutral. Okay. CAD yen, neutral. Euro yen, sell. Okay, let's take a look at Euro yen. All right, so Euro yen currently in position for a sell. You can see here, we've broken the support left-hand side. Okay, let's do this. And so today might be an interesting opportunity for you to just sort of do a sell or a scalp down. Let's have a look and see what H4 looks like. So here we go. Let's just clear this chart out quickly. And we can see here, we've got this range. All I have to do is just do this. Okay. Now on H4 might not be very easy to see what's going on there. Let's jump on H1. Okay. Let's just get rid of something over here. Now I can look at this and say, well, do I have an indication of range? I can see it in H1. There it is over there. Sorry. All right, M15, but easy to see. Okay. So currently also low momentum. So looking at the daily, you can see that price breaks that support. Does that become resistance? Looking at H4, let's bring in that level. Okay, so that level is just over here. That's purple level over there. Okay, so look at H1. Bring that level in over here. Okay, right. So what I was looking for is just to see, like, below that level, do we have any lower lows or lower highs? Now you can see we don't, because of course our time frame over here is not bearish, M15. So even though I've got price breaking the support over here and potentially becoming resistance, I don't have any indication of bearishness on other time frames. So what I could do then, you can see that's why volatility is so important. Wait for this candle to close. If we break out of here, let's say you get a red candle that closes over here, jump to a different time frame, look to see if you get on a different time frame, price pulling back to the bottom of the range, H1 or M15, and see if you can sell this. Recognize that we are currently sideways, but if you can trap this price and price breaks out, you get a pullback, sell, then perhaps you have yourself an opportunity to take this down. Now, your profit-taking zone, because of the fact that everything is so sideways, you kind of open up in the weekly M3. If you get a lower low, lower high, you could take it down to weekly targets, but it might also just be a day trade. Now, of course, this depends on whether you get a breakout pullback sell on this range of here. If you don't, and if price breaks out and doesn't pull back for the sell, you don't sell, because in price coming down just to come back up and price is consolidating. Okay. But at least now you know you can pay attention to this and wait for this to break. And you're going to exercise your opportunity to sell this because of the bias, the fundamental bias. Looking at pound yen, you can see coming through neutral. And Kiwi yen coming through with a buy. Here's Kiwi yen. And you can see there, price currently, this red candle here, let's take a look at this. Okay, so broke this support over here. Came down to the support over here. You can see this red candle here breaking into the top of this range. Okay. So price came down, price came down, price came down. Now, in terms of a buy, I don't see this red candle sitting in the support of the left-hand side over here. Currently, 21.55 is flat. Looking at this over here, you can see that we broke out of this range over here. Price didn't make a lower high, okay? Which means that we're not currently trending bearishly. Price is coming down. Price is going to return back up. So what you're paying attention to is if price comes down to support, just verify a lower time frame. Okay, so for example, H1. You can see here, I don't have higher, 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 low. Could be paying attention to M15 then. Higher, 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 low. Okay, you can see at least we got moving price on these charts. So higher, 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 low could be beneficial. But you want to verify it. You first want to don't just verify higher highs, higher lows, M15 by itself. Verify price being at support first on the lower time frame. Okay, so you want to see price closing at support. Now you can see here, left-hand side, we do have some support left-hand side over here. Okay, this candle here currently breaking it. So perhaps what you could be doing is saying, well, I've got some support down here. Is price finding support? And if it is, can you take it back up to there? It's like 56 pips. But you need a higher, 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 low M15 and verify bullishness lower time frames. Okay, like we're in slim pickings right now, friends. So we got to just look for these opportunities and be open-minded, but make sure, as open-minded as we are absolutely concise in our analysis of knowing that we're buying because it's bullish. And how do you know something is bullish? Well, higher highs and higher lows are indicative of bullishness. But make sure that when you get a higher high, higher low, you're not just using the moving average, you're also using a role reversal. Price must break resistance and resistance must become support. Okay? And be aware of how far up you're taking the trade. So if let's just say you got a higher high, higher low M15 and you bought this, when price gets up there, pay attention to what's happening. Don't just close. Don't just be scared. Oh, I'm getting out. If you see lower lows and lower highs at this level over here, then you know it's time to take profit. If you don't, the price breaks through this, well, then you're set for the weekly target. That's the goal, right? Our expectations always have to be aligned with reality, though. So you must always pay attention to what's going on your chart as you get to areas where there's danger of other traders jumping in or bulls taking profit or whatever the case may be. Okay, cool. Let's take a look at our Swissies. So in terms of our Swissies, we've got Euro Swissy coming through with a bias of buy. Okay, cool. Let's look at Euro Swissy. Okay, you can see there currently sideways. We had this range over here. Okay, we did not touch the top of that range. Price came up. Now price is coming all the way down. Okay, you're looking for price to find support. You can see on H4 time frame, even on daily actually, we aren't really at support right now. So leave this alone. Let this settle. Price comes down here to find support. Maybe then there's opportunity to buy it up. We'll have to look and see, right? But right now, price is currently falling, and we're not in a trend. You can see the moving average is flat. I want to see some volatility on this. Okay. Looking at pound Kiwi. Sorry, yeah, pound Swissy. Pound Swissy neutral, leave it alone. Aussie Swissy coming through neutral, leave it alone. Kiwi Swissy, neutral, leave it alone. CAD Swissy, neutral, leave it alone. Okay, cool. Now, what you can do now is you can then go through all the other pairs. So I've had a look at the charts technically. I don't see any opportunities standing out today. So you can look at these charts over here, look at your fundamental bias, or what you could do is look at your market heat map. And you could say, right, what is my most bullish pair? So again, like Euro Aussie, for example. You can then jump onto your cross currency, Euro Aussie, and have a look at the bias in Euro Aussie. Or you could look at your bearish pairs and say, oh, like, what's the bias on, look at all your yens. Look how your yens are down, but your indices are up. That's interesting, right? So look at these pairs, look at your fundamental bias, and you can continue checking this. But recognize the fact that this market heat map is amazing, right? But the most important thing we're paying attention to right now is volatility. Once markets are moving, this heat map is absolutely gorgeous, okay? Right now, what you're doing is you're paying attention to change from neutral to bullish or neutral to bearish, both technically and fundamentally, okay? Or in the case of the dollar pairs, you're paying attention to all these bearish fundamental biases, and you're looking to see like, well, on the chart, are they representing that bearishness? At those levels, for example, we spoke about Euro USD just now. where you've got price sitting at this support over here, or at this buy zone in a sideways market. But are you seeing bearishness right now? Are you seeing lower lows and lower highs? No, you're not. Are you seeing higher highs and higher lows? Or could you then be short-term long? So you're being open-minded to how things are progressing right now, and you're paying attention to change. Take all your dollar pairs, put them on a watch list, know which time frame you're paying attention to. For example, all the dollar pairs except for USD CAD, you're looking at the daily time frame. For USD CAD, you're paying attention to the H4. Know which time frame you're paying attention to. Know where you're looking for the break. Identify the break. When it happens, verify the pullback. So if price breaks out in the H4 time frame, you can verify the pullback on a lower time frame instead of waiting for price to pull back H4, H1, M15, whatever the case may be. But then recognize if price pulls out on the 4-hour time frame and H1 pulls back for a lower high, but H4 doesn't, H4 is not bearish. It's the lower low and lower high that makes it bearish. Other time frames will be bearish, but price will eventually come down and then pull back up because the H4 has to also complete. Fractals. Stay patient, stay disciplined, stay liquid. Have an amazing day, and I'll see you fine human beings tomorrow.